where I am right now. My sincere apologies for the delay. The way we will handle today's session is primarily sort of to talk about the use cases on account aggregator. We'll spend some time around that. And also, given that, we normally talk a bit about funding, so we'll spend first few minutes also to talk about where the country is heading on the funding side, because this is something which we keep doing it every now and then. So I wanted to ensure that we don't miss. Again, we'll not spend any time on it. Maybe just 3 Sorry,
Samir,
guys.
you're on mute.
This is a bad day for us. I'm really sorry. It has never happened, but yeah, today's bad day. So, as I was talking about, we'll spend some time on the funding side as well, and then we'll talk about the ecosystem. Before the network throws me out again, let me just start with the deck, and we'll take through the questions as usual. Okay. So, quick, maybe 1 minute on us. We are, from a digital transformation perspective, we are GFSI focused entity, the largest player in the market. So we work with banks, we work with network players and bureaus, and also fintechs, right? So across the 6 segments, we work a lot. What I will do is I'll remove my video, otherwise there'll be another problem that you might just be having a problem in seeing me, right? So I'm just removing my video as well. So hopefully the system can work. So space in this segment, as I said, we work with a lot of founders and all. We do consulting work, which is where a lot of our knowledge comes on. So whatever we're sharing is whatever work we have been doing and we have been working on is coming across with a lot of banks and other entities. Partnership, we do a lot of recruitment. So if you're hiring in the segment, or if you're trying to train your entities, your team members, you can look at us. And we've been growing all through. We have been there for 5 years, and we are growing. We are almost now, I think I just realized that we are almost like 18, 19 people or 20 people, I guess, something number like that. So we're growing all through, and we are expanding as well in Bangalore. This is where I am right now today as well. Customers are worldwide, and all the large players in the market, including banking segment, and every other segment is also working along. And of course, we are working with almost all payment networks and all bureaus in one way or other, either as a partner or as a sort of some level of work with all of them. Largest network in the market in the segment. So from across emails and all, many of you would be receiving emails. Maybe Matthew, you can share the details. If they are not getting emails, they should start getting. If they are not having access to the YouTube channel as well, they can have us a look at YouTube as well. So I think you can share those details as well. And these are some of the documents. So anybody who feels so, Matthew will share the link for your inputs, and also maybe a feedback. And then if all those who will share will get a feedback. So this slide you can know, but we from a large transformation program which we did recently with Suryo, where we actually end-to-end transformation we did to a large transformation journey or a digital strategy journey for bank, we do across board. Any which way, so we do trainings. I think training is coming up. Large one is coming in December, and you can join us for that. Very methodical, and we work with a lot of entities more and more every day. So you can join there. And then we work on the hiring side with multiple players in the market. If you are looking for hiring this segment, talk to us. We can help you there. But let's go for a very short section on funding. We'll not focus more than maybe more than few minutes on this. We have updated this as recently as maybe last few days. Mithil, can you remove my admin rights? I'm seeing too many blips and in and out, right? So we've seen that the funding has obviously not grown as much. This data is as of 12th of October, almost recent data. You can pick this up. This data is backed by entire analysis we have done on the background. Now, what analysis? These are the top 15 entities which have got funded. Interestingly, you must be surprised who is Five. Five is your early salaries now called Five, and similarly, credit revenue is called UB. So you may have thought that these are new names coming in, but these are same entities with a new name coming in last few months, few years. In terms of starters funded, again, this section is only to give you a quick view on funding. We are getting into account aggregators only. Now, in terms of funding, payment side funding is obviously not as high. Lending has still been decent. Open banking has been decent. Just look at the Wealth-Tech segment, right? See the amount of funding which has happened. So I think Wealth-Tech over a period of time has shown more and more impact. In terms of amount of money which has entered, purely on the lending side, the actual lending is more. But that's also because if let's say Razorpay would have got funded, last year we would have qualified that as a payment company, whereas actually it may be a lending company or open banking. So that is a challenge which you see here largely. Otherwise, you see funding in open banking happening and Wealth-Tech. So wealth is a critical area where we see action, and of course, lending is where we work a lot. So both Wealth-Tech and lending areas we do a lot of work. Obviously, payments and open banking and enablers also we work on. So in terms of startups funded, I think if you look at pre-Series A, it has been a decent number. Series A, Series B also is a decent number. I think the challenge is on Series C and of course D, but bigger challenges is here where the amount of funding which happened on Series D plus has come down to by 80%. Similarly, Series C plus, which is a large set of funding which happens, has down to by 50%. Whereas Series B, Series A has been okay. I think this segment is okay. Early stage, if you are getting funded, it's okay. The late stage is an issue. Yeah, so that's largely a quick view. What we see in the market is that funding has moved to a bit more diverse area. There was largely stuck in payments and in terms of lending. They have gone into Wealth-Tech, some InsurTech, credit card business because prepaid got stopped. So credit card focus increased dramatically. We see a lot of traction on credit card in the system. So credit card stack, anybody on the who are on the prepaid getting into credit card, they will get funded. Embedded finance still remains a great area to work with, and many of the players and friends are actually building it up. And if you're into B2B business around that, putting up a SaaS platform, that will also be good. So I think we see a lot of M&As as well. So I think we'll come back with a report soon on M&As, but that itself is not a small number. Fair amount of M&A has happened in this period. I'm assuming that if you guys could hear, maybe the videos will also work. I find it very difficult to talk without video on, but let's attempt. Now, let's come to the crux of the session, which is account aggregator. What is it? How does it work? Kind of stuff, right? Now, the biggest problem I always faced in my life was that even today is that my data is across. I'm old. I'm 51 now. And my data is some on insurance side because I was working with multiple organizations. Each of them asked me to open an account. The account was never closed because I had more accounts. Then you had added NPS. Then I had a policy which was with LIC through my Wipro days. So that exists, which is we can't take away. So if you start figuring out from in which all areas my money is lying, that money is maybe lying with something like 15 institutions in different ways. And of course, if we talk about mutual fund, it will be even higher in different silos. It's difficult to figure out what's happening. Now, so data is spread across the realms. I think everybody has to, let's say, if I have to collect my data, I myself take a good solid 6 hours to figure it out, right? Because, and nobody has 6 hours as such to do this. So what you end up doing is, and why 6 hours is that you don't get these details on a daily basis. So you have to figure out, oh, where is my LIC password? Okay, this is there. This is my password for that. This is my password for that. And it takes time. Then you say, is there an alternate way of doing it? So you'll find an alternate through OTP. So it takes time, right? So you collect it together in your Excel, and then you can't go to a detail level because it's very difficult. So reconciliation becomes a mess. So I myself can't do it for myself. So if you are a lender and coming to me, at best you will ask for maybe 1 or 2 accounts, that data you will pick up. So you will get half the data. And that's about it. And then, of course, the bigger challenge is also, so I spoke about the friction in the process. If you have to get it, you will have to use the ID passwords. That's what screen scraping was the process of data aggregation all through. For last 10 years, India has been lending based on screen scraping. Correct way of doing it. You are based in a very unstructured, which is not good. And which is why RBI came back. And then, of course, this is a bigger one, right? Lack of recurring data collection. You can only once because you are using ID password. But how do you get it on basis? That framework was not available. And then account aggregator as a structure does help you. Account aggregator as an entity, and this is an NBFC, as it is called. It basically acts as a consent manager for financial between 2 players, provider and maybe, and that entity will ensure that all the data-based consent basis, you cannot share without a consent. The data, they are data blind. So these entities do not store any data on their own. And since they do not store, they really can't do any analytics at all. The data is completely encrypted as it's passed through. And the customer today may not have a right to say, I can access, but here in the structure, the way you have, so you can revoke, you can suspend, so that the other entity may not be able to access it. Today, interestingly, when we use NSEH, the way it is registered, it's very difficult to revoke. In your internet banking, you will not be able to find it. There are a lot of challenges. So I think RBI has gone one step ahead and said, boss, your account aggregator entity will manage consent end to end. And it's very, very powerful. I think none of this is our ID. Our IP is basically what RBI and Revit did it as part of this entity. And of course, Sahmati as a group has been very, in a very, very positive way. Mahesh and his team are doing a fabulous job of it. Now, when you think of account aggregator, what are the different entities involved? So one is the account aggregator itself, entity which will basically create a consent architecture and work. Now there is now whatever data comes, somebody has to provide data, right? So this data is provided by the mutual funds. I'm sure many of you would be surprised by NBFC. I'll talk about it later. But NBFCs also have to provide a certain kind of NBFCs. Then FIUs, these are the entities which will use this data for certain purposes. Now, these entities can be, one, they have to be a regulated entity by SEBI or RBI or at least IRDA. Somebody has to regulate these entities. And these entities will provide the end unit services to the client. And then there is a TSP, which basically can be of multiple types. They can be TSPs which help us integrations. There'll be a TSP which will have build analytics layer or decision-making layer. There'll be a lot of entities which will of this kind come in on the platform. So account aggregator, FIP, FIU, and TSP. Now, original framework of account aggregator did not have a TSP, but it's very difficult for any bank to integrate with, say, 6, 10, 15 account aggregators, because account aggregators already are, I think, 5 or 6, and they have given maybe a in principle approval to 8 more and then many more. So each bank will have to integrate with so many account aggregators, and they will have to create a consent architecture for that. So therefore, there's a TSP which has come for it. And of course, there are entities which are coming to do help in analysis as well. So that's how, what are the different entities? And if you look at very, very simplistically how it works, you have an account aggregator entity, and let's say this customer is basically gone on board, he gives his consent. So how it works, it's actually not that difficult. What I did on, I'll give you a real life example. I had, and not that FinView is paying me any money for this, but I went on FinView, did the addition of, they added myself to the platform as a user, aggregated my data there with from 3 banks. And then I went to one of my app, which is IndMoney. And in IndMoney, the consent I gave, so they are using it for, in a sense, maybe a PFM kind of stuff, right? Somewhere around that, or well, somewhere in between. So there are data providers like a bank, mutual fund, insurance providers, and GST and all of that. So what will happen is that I give the consent to, let's say, IndMoney or any of these entities which are doing flow-based credit or a PFM or wealth or robo advisor. These entities will actually request for data based on the consent from all these entities or some of these entities. That structure is defined by the customer, and then this gets registered and processed back. So account aggregator at the end will not retain any data, but we should know that this is the entity which asked this data. This is the entity which gave the data, and some level of audit report for that and consent architecture for that, but they will not store data as such, right? So that's what the role of account aggregator. FIUs are all banks, all wealth players, all the NBFCs, and FIPs are again banks, mutual funds, insurance providers, GST, and over a period of time, many more entities will also come. And if you look at it between this and the bureau data, the customer's entire background and history and every data will be coming. So if you add this data to bureau data, you have literally entire data which you wanted on the customer side. Of course, you can keep, you can come back and saying there's more data available, but yeah, critical data of the customer is made available on an instant. Now, I'll pause for a minute and take some questions. Yeah, is my voice still cracking?
A bit.
Is it still cracking? Oh, sorry. I'm really sorry. I am actually on mobile data because there is no data available right now with me here. I'm really sorry for this. Are you able to follow, or should we do it again separately?
That's good.
Is it?
It was
You can continue.
Yes, you can.
You can continue. It's clear. It's clear enough.
Oh, thank you. Thank you. So in terms of the consent architecture, it can be, you can search for whatever consent you have given. You can pause and revoke. This architecture is beautiful, right? Because on FinView, I know kisko maine, what, to whom I have given for what activity. And for example, there's always a validity. This is valid for what period? What is the purpose for it? So the purpose is very, very critical, right? Let's say, for example, you take the data primarily for, let's say, lending, but you start using data also for, let's say, wealth management or some other purposes. That's illegal, not permitted. So customer should know what is he sharing data for. Another very interesting aspect of fetch is you can do one time and you can also do periodic. Now, what will happen is that one time you do, it's fine. You do the activity, your balances come out. But let's say you can say, I want this data to come to me or shared with my bank or lender on a monthly basis. Now, your lender will get the money on the data on a monthly basis. What is the power of it? The power is that with this data, he can actually, or the entity can actually do your early warning risk. They can also manage your credit profile and come back with increasing your offers. If you are a wealth player, you need data on a real-time basis, so you can actually pull data So for example, when I go to End Money, when I click something, the balances come out on an instant basis, right? Or some of the clients we are working with them to build the same framework. We are trying to ensure that this is real time. So you can pull data on the real time basis and show. So the point is, it is no longer one time, it's periodic. It will help the wealth guys. It will help the lenders. It will help any PFM guys, and maybe more use cases will be built than we are aware about. Insurance guys will use it. Everybody will use this data. I do believe that the way bureau score is shared with not just regulated entity but non-financial entities as well. I do believe at some point in time, this data, because it is actually the customer's own data, will be getting shared beyond a regulated entity. But as of now, both FIUs and FIPs have to be regulated entity by one of the regulators in the market. And one more point, you can get the full details of the data, which means that when the statement is shared, it is not just a balance or some, so you will actually get the transaction level data as well. So it's just not the first level, but transaction level data is also available on the platform. And any of you, one of you is confused, how does it work and all, please go ahead and download FinView or One Money or other players and use their app. You will get the answers in seconds. A lot of times, teachings are of very, very little value. Experience it and it works beautifully. I remember in UPI days, we used to talk a lot on how it will work. And when people are using, they realize it's so easy, right? Basic underlying is so complicated, but the front end is simple. So it was difficult to figure out a 4-party model, but 4-party model is a very basics. Anyway, so let's come back to what are the various players who will use this data. It can be lenders, it can be wealth players, it can be microfinance players. Now, what data they will get is banks, obviously, if they are doing on their own, they will get deposit data, savings data, FDR data, and their own bank loan account. Now, along with this data, they can actually pull bureau score, and then you have the 360-degree view of the customer. NBFC, as I said, are also going to also have the deposit taking FDs, deposit taking NBFCs. Now, these, let's say Bajaj is a deposit taking NBFC. Therefore, these guys also have to be onboarded as a FIPs to come on board. You can't be an FIP. You can't be, if you are supposed to provide data like a bank, you have to be. You can't be FIU, which is a user. You have to be FIP as well. Same way, if you can only come onto a bureau if you provide data. Same way in this structure, a bank cannot come and saying, I will only pull data and not provide data. That's not possible. They have to do both ways. And that's what I think Sahmati and the RBI is pushing for. Wealth firms, now interesting part is few days back, SEBI came back that every stock details and mutual fund details will be made available. Now, when I say that PMS will be made available, I know that PMS is right now not digitized, but NPS is. So my sense is that stocks, mutual fund, and NPS will quickly come in. PMS will take its own sweet time because largely it's really not digitized. But hopefully next maybe couple of years or 3 years, we should also have PMS getting digitized. And hopefully at that point, it will be made available. And on the insurance side, obviously the entire insurance, health, micro insurance, endowment, all kind of insurance data will be is available. Now, given below as simple use cases, you can do based on customer data. Let's say your bank, because you are collecting data from the customer, your own customer, across bureaus and across account aggregator. You will have a full detail about the customer and you can make a compelling offer to your customer. So very, very critical for banks to ensure that they have a good view of the customer, of course, after taking customer consent and offer this service. So you can actually do a loan portfolio takeover. You can offer newer products. You can do a cash flow analysis. For example, you will exactly know what is in and out across my banks. Credit scoring logical. You have enough data. This data is good enough. You can actually do credit scoring. You can actually, based on this, you can actually create a product. For example, a loan against securities is not a very normal product, right? Because this data is not easily available. With this structure, it will be available quickly. So you can actually create a loan against securities rather quickly. Early warning system, I told you that now you can pull data on a frequency basis. And if that you again have a power gold loan or any other product you want to launch, you want to do tax planning, you want to do any kind of risk tolerance, even if you want to figure out which customer to target, which segment to go after, you can figure out all of that. I spoke about upgrading of the customer, customization, all of that is possible. Of course, these are at a very rough level. I mean, when we sit with the customer, we customize it in detail, but at a very broad level, some of these, I think this is powerful. Wealth is powerful. Everything you will see a completely different level of services coming up. At this point of time, these are the 6 active account aggregators. As I spoke about FinView, no, they have not paid money. I just was using them. And then you have Porpheus, you have NADL, Yardley, One Money, CAMS. Many of these have now got in principle approval, and as they get through, these guys will also help in scaling up. I do believe that PhonePe will have a certain impact on the ecosystem. Tally may also come back with a structure primarily focused on MSMEs. Let's see how it goes from there. And this is how FIP ecosystem looks like right now. Now, just to make it clear, there is this framework where green is all live or live enabled. Basically, you can use it now. Then you have yellow. Yellow lines are somewhere here. These are the entities which are actually in testing or development. And then the red entities are those which are under evaluation process, right? So if you look at a lot of PSUs are already on board, which is the largest database. You also have a lot of large banks, private sector banks like a Federal or a HDFC already on board. Yeah, so I think this is where the the whole meat is. And then of course, in between NBFCs, the largest of the NBFC, which is Bajaj, which has a lot of deposits comes in. Now, critical element as we see, and of course, ICICI and Tata is also already available. But the day you have depositories and RTS coming in, the entire stock and mutual fund will be made available, because entire stock is between NSDL and CDSL, and entire mutual fund is between Fintech and CAMS. So while banks will take more time because data is splintered across multiple banks, and in the mutual fund case, it's all aggregated with 2 players, and that should make a rather fast impact. I'll take a pause now and take few questions and then start. So happy to take few questions. Let me see. Okay, Santosh has asked this question. Can AA pull statement from bank on a particular period on customer consent and share on my platform? Yes, Santosh, customer can. Ideally, this consent-based architecture, when it is pulled and shared with you, ideally it should be a regulated entity, because that's how you can pull data out. Many guys will do it in a very different way. There will be rules getting broken, but you have to be registered as a FIU on the platform, and therefore you can. So you need to register yourself as FIU to get this data in a direct manner. Santosh, that's my quick pointers from my perspective. Happy to take more questions before we go in deeper into ecosystem and talk through point by point. I don't see any questions. Either I'm very clear or it is basics. So I'm assuming that I'm clear, because basics ko ke main apna value nahi kar raha. Okay. So yeah, I saw a question coming from Vibor. He's asking, FIP and FIUs both have some commercial benefits to come from this system, but what is the commercial benefit coming out of AA when they cannot store and use data? I think before, I don't know why. I mean, I'm not a biggest judge of this, but there's a lot of noise made about this point that why should anybody become an account aggregator? There's no benefit. Okay, so one, they will make some minor money on it as a processor. Same way you should assume that India should never have an RTA agent, because RTA makes limited money, but again at scale it makes money, because I think over a period of time right now, while we see 15-20 companies coming in, but at scale maybe 5 or 6 will remain, because it's that's how it's like a network business. You build network and you get utilized at a massive scale. not too many guys will come. So that's my take at a very broad level. In fact, the question should not be from a FIU or a account aggregator perspective. Why should FIPs share their data, and how should they price? I think that is the question which people are prevailing, that how should they price the data sharing? And my 2 cents on this problem statement is that and this is a quick point from my side. I know I'll take your video off in a second, but yeah, the way I see it in the market, the core platforms of banks, which is any of these banks in the country, my personal belief is that with UPI pumping in data, an account aggregator coming at a free price on day one, and the customer can pull data in UPI, you have to make money. But what if I'm fetching data, and I'm fetching data at rapid pace every day? I fetch twice and 5 times or 3 times. If it is not charged, very rapidly it will become like a nuisance for the banks. And unlike a UPI 123 or UPI offline, where they're trying to create a wallet kind of structure on the mobile itself, you may not have the option because you need real data. My biggest worry is that core banking in the countries will start going for toss, because I'm assuming that everybody over a period of time realize that it's free and they start using it. It can have a debilitating impact on the country's banking infrastructure, and it may just go down. I think I would, if we see the current thought process and progress and the kind of push, I believe that in next 18 to 24 months, at least 3 to 5 banks who are bigger contributor to this, if they don't act now, will face a complete system outage because of the amount of effort or impact which this platform does on the back ends of the so many banks, right? So it's dangerous value proposition. So yeah, that's my pointer. Just one sec. Let me just take one more question. Can TSPs also become part of the ecosystem and receive data, or becoming FIUs mandatory? No, look, TSPs may not be part of ecosystem at all. So you should assume that the way in banking ecosystem, Finacle or Oracle, they are not, they're only tech providers. So they don't need to become a FIU at all. Rather, they're not permitted to become, because they're not regulated entities. So that's my take. Yeah, another question I saw from Himanshu: as India is yet to see a data privacy legislation, how much disruption do you think is yet to come, and will that make the customer and the data more valuable and doing business more difficult compared to the way banking as service? And okay, so I think there's a lot of pointers here. I don't know what, it's too complicated for me to answer. So Himanshu, you want to ask your question, do it right away. I'm not able to follow your long question. So if you have it, please ask. Otherwise, I'll proceed to the more details of it. Yeah. I saw another question coming from Ashlesh. Can a non-regulated entity, say a Google Pay, become a FIP? No, FIP can only be those who are providing data. Google is not providing their own data. They cannot also come in as a FIU right now, until unless there's a framework change coming. And as they are not directly regulated by RBI, so therefore they need to take some kind of license, at least under maybe they can take a license under as a broker in somewhere, or they can come under SEBI. They'll have to have some license to get in. They would not be able to enter without it. Is FIU as a service allowed? I don't know the meaning of it. The framework is very simple. A lot of people are right now building tech stack largely, and they're embedding. So if you go to a Sehmati site, you will find a lot of TSPs, and these TSPs are trying to build tech stacks for underwriting, analytics. The way you have bureaus, similarly, a lot of people are building on top of maybe a bureau score plus this score, and trying to also do a real-time update, right? So let's say if something happens, give an offer on time. So they're trying to figure out a lot of use cases. So at least right now, 40 odd entities are building for it, right? At this point of time, I think I see 2 hands up and running, yeah, Pratish, you please go ahead.
Yes. Hi, Samik. So one simple question is that I have already used this account aggregator applications for as an individual from a savings account. So when do you see, or is it already on way for the current accounts for the businesses who have non-individuals who have opened current accounts? So when do we see that data being shared? I mean, being available on this setup?
I think I'll need to work back on that. The reason is very simple that I think I need to still check that consent accuracy is like a in definitely on it will be a challenge for partnership and private limited. I need to check back, so I'll come back. So maybe Maitri, just take this question. I'll respond back and to this group as well.
Thank you.
Yeah. Yeah, I don't know, Pablo. I don't know which name to say, so I am saying, yeah, you go ahead with your question.
My name is Juan, like number one. So hi everyone, how are you? Thank you for this for your webinar. I've been following you. I'm located in Bogota, Colombia. It's 8 a.m. in the morning. So I'm one of the co-founder of the Colombian Fintech Association, and what I do is kind of the consulting, the B2C digital lending consulting. And we've seen that kind of aggregators here in Latin America, and we call them like open finance. At the beginning, it was called like open banking. Now everyone uses the term as open finance, and those aggregators, I've seen that the trend it's more towards fintechs using that kind of services, getting to banking accounts primarily and pulling out the information in order to model the risk, or to structure the risk model. What are the trends in India? Are banks using more these kind of services, or the fintechs, the lenders, the small fintechs? What can you tell me about it?
So I think from a usage of these frameworks, it is a collaboration largely, right? So fintechs were the predominant players who actually pushed for it. But along the journey, both the entities are using the frameworks, right? I'm assuming that you're looking at open finance, how far it has reached. So if you look at MSME side, it has started growing. On retail side, it has some decent entities which are doing it right now. Lending is a bigger use case till now in the country, where open finance kind of framework has come up at a rapid pace. We see credit card coming up as well, because co-branding has come up because of regulatory change, where prepaid was not on a credit or prepaid was not permitted. So I think you would it's like fintechs are non-regulated in most cases, and banks are regulated. So therefore, the collaboration is mandatory. Actually, it's normally not banks, but NBFCs which are providing bigger credit in the market using APIs. What has also happened in India is that the regulator is pushing every entity to come to a regulatory framework, right? So they are saying that can you become either, so we are looking at can you become at least a NBFC, which is a non-banking financial company, so that we can regulate. So that's where the world is moving. And a lot of things which were the regulatory arbitrage is down to very close to zero. I think while people are still leveraging it because the regulator may not have chased them in many cases, but what I see is that in next 12 to 18 months, the arbitrage actually is right now zero, but people are still playing with some here and there. But after some time, it will not exist. So they'll have to get regulated. Then you will do a collaboration in a different way. You will become an NBFC and you will do a co-lending. There's a framework of co-lending, but I think we are going away from the framework. Both the entities use, and what has also happened is the banks in India have also taken a lot of neo-banking knowledge and launched their own platform, and they're done. In fact, the largest neobank in a sense is Kotak 811, and my guess is they alone will be larger than all the competitors put together, right, on a digital acquisition side. So I think banks also have been pretty decent on the digital side.
Okay, thank you. Let me ask you one last question. Is Account Aggregator?
I think
okay.
So we will do it one-on-one. I think otherwise, because the rest of the guys are mostly from India, and
Go ahead,
they may
go
all, or they may be speaking. So you and we will connect, and we will take it through. Yeah, sorry about that. Yeah, just one second. Let me just open that. Yeah. So this is the ecosystem which we have built. As I said, what we are trying to say is that you look at just lines, see green, amber, and red. And green basically means they are already live. Amber is somebody which is in the testing and development, and red is obviously they're right now under evaluation. But there are a lot of other entities which are not in the game. But the moment these two guys come, the entire mutual fund and stock will come and will have a massive impact on an immediate basis. Now, where are the use cases? We'll talk about it more. But if you look at Oaken framework, which is largely a framework or an API structure, which is used primarily for lending purposes, which is the open stack for lending. In that, obviously, Account Aggregator will be having an additional play, because when you are underwriting a customer, you can pull data. Why I put this Account Aggregator here in the structure is because if LSP is a regulated entity, it can be here or it can be on the lender side, depending on how the architecture is laid. But largely, when you're doing underwriting or you're doing an API, you can pull this data. Even today, people do it in a different way. There's also a framework. I took a session on ONDC. If anybody is interested on ONDC, maybe Matthew, you can send the link to them. They can have the last. I did the ONDC session, I think, a couple of weeks back. But if you look at ONDC architecture, which is basically open e-commerce framework in the country, what ONDC network is doing, they are basically creating a network policy, reputation ledger, which is how the rating of the provider is, and the entire ledger is made available, and then there are payment gateways made available. So any buyer, retail buyer or MSME buyer or corporate buyer, can actually use a buyer side app or any super app or any framework, work through multiple gateways and interact with the supplier side apps or a super app, whatever it is. And then on which you will have a supermarket, kirana, retailer, and all of that. This framework has been built primarily to create an alternative to big giants in the country, which are controlling the entire network and sucking the blood away in many cases out of these small providers, because they really can't negotiate. If you were selling at 500 rupees, what if your partner comes and saying you have to sell at 200? You have no choices because he's a dominant player. Now, in this framework, you have this whole financing happening, right? Insurance or a supply chain and all of that, or even Oaken is actually only technically a API architecture. Account Aggregator will basically support in the lending process or insurance process both ways. So if you're doing insurance, you can use Account Aggregator because you can have insurance data coming off of that. Many times insurance guys also look at your data because they want to ensure that you are when you're taking insurance, you are doing it for the right price, size, right price. Right size, not price. Price is defined by the insurance company. So I think AA has a role to play across ONDC. Again, it will enable real-time lending, real-time insurance. The growth has been pretty decent. I think while many of you may not know, the regulation came in 2016, around, I think, November. That is the time when I resigned and started my company. It has been there for 5.5 years, but now it is showing sudden growth. And this data is, I think, was picked up, I think, today only or yesterday only. So you have almost 1.64 million cumulative accounts linked. So that is the number which already exists today. Now, what we believe, and not that I am right and I know everything, but we do believe that this will suddenly show a growth metrics where I think almost 41 million customers or 4 crore customers will come on board, and then it will go on a growth trajectory from here, right? I think it's a matter of time. I think this is like some thought process from our side. I think this number is 2x, which is what we'll see. This number is incorrect. It's 2x. So you see that kind of growth happening over a period of time. Every customer, every account. So in India, we have almost 85 crore accounts as of now. I think that number is close to 85 crores. And there are 25 crores or 250 million UPI users, right? Technically, every UPI user can be onboarded on consent architecture on real-time basis. So that number is the base. Most of them will come. And then also, given that there's so much of push and pull for lending, those all lending use cases will also go in this same direction. So I think this will have a viral growth, and we will have almost 50% of the accounts linked on the account aggregator perspective in next 3 to 3 years. That's what we believe will happen. Again, this projection is done based on our understanding of the market. Not that it's a very complicated science, but I think this is what I believe based on whatever numbers I could figure out on the UPI side and overall accounts. We believe that 50% of the numbers can be reached in next 3 years because of the virality of the product. Maybe I'll spend few minutes on use cases, and please keep giving us feedback. Only those who will give feedback will share the deck across to them. I think the clear case of underwriting, which we know, credit underwriting, definitely these frameworks where if you're doing for credit cards, if you're doing early warning, they will have access to the customer all the time, and they also can use it for target marketing. If your own customer data is made available to you across all banks, you will not. Today, many banks say that we don't know much about the bank customer, but when you have access to account aggregator data, you will have full 100% access to customer data, and you actually can offer make them offers on underwriting or on the loan side, because you can underwrite the customer fast. And from a user perspective, it is a nonsense and very painful task of filling the application form, or maybe give you a access ID password on the platform to somebody else, or get some statement or documentation, or even today prevalent, sadly, we are talking to another case where we have to go to the bank, get the authentication done by the bank, saying that this guy holds this account in that bank. I think that my understanding is the way IMPS was used for penny drop. This also can be used for sort of penny drop plus, because you will, in penny drop, you don't get balance, you will get even balance here. So very interesting stuff you will get through this framework. Insurance guys, obviously, these providers can actually, once they have entire data of the customer, and the previous data on the claim processing and others, which these entities will share. Again, these guys can also figure out what offers they have to make on insurance side, processes, history, and also, and from a user perspective, it's easier. It will hopefully become easier to buy insurance today. I did a insurance company switch. The process, and it's the easiest product, which is car. It was, unfortunately, for whatever reason, it was painful. And that I think, because we changed the car number from Bangalore to Mumbai, and the transfer was very difficult. I remember those days. So I think this kind of structure will help. Wealth is very, very powerful. I think, again, you can actually onboard customer, look at data, offer them services, offer them across wealth players can also offer them new ways to invest, because you have a full idea about his addition of revenues on a real-time basis. You have today, when you look at data, you look at it once in a month. I know that when we're working with many of the wealth players on their digital initiatives or digital transformation, many times we get data only once in a month. I think this framework helps you in real time. So this will be massively impacted. From a pure user perspective today, I find it very difficult to do expense management, because we use different cards at times. Net worth becomes very difficult. Hopefully, I'm also hearing that phone and utility payments will also come in the same framework. Even if they don't come, they can be read in the statement, and maybe this data can also come from BBPS perspective as well, right? Across BBPS, you can pick it up. You don't need utilities out there. And you can actually know all the frameworks, and also many times when you don't have anything, maybe NTB customers can also be brought. I know it's not a case here, but I'm very, very gung-ho that my time spent will reduce. Anyway, so this particular session is what is part of our course when we teach. So we built this session specifically for the almost first couple of weeks. We teach on the India stack and all of that. That's coming up in December 4th. And as part of this program, please do, if anyone is interested in joining that, that course is running for 6 months, where almost 100 hours of training will happen. We will be typically running from 3 p.m. to 7 p.m. India time. You can join there. And we will basically, that's again a live session, the way it is, far more interactive because the number of participants are all known to us. We interact with them a lot. And in this program, one more change we have done is while we will interact, we'll also get external experts. So typically 30 to 50 experts, depending on the use cases. And these are all industry leaders. You'll have the best of the VCs, best of the investors, best of the founders, the guys who have built unicorns and early stage. Everybody comes and trains the participants. So you will get a new ecosystem. Network will be great. Many of these participants have gone ahead from previous cases, have built their own companies. Many of them have done fabulously well. They've got hired well. So you can join us. One change we have done is that earlier we used to run fintech open banking and financial blockchain. What we've done is, given that many people were looking at, they didn't want to go into blockchain and some of these areas, we've created a specialization structure where digital banking we have segregated because many bankers only want to get deeper into it, or many of them want to become founders, and many of them want to get into blockchain. So we have created super specialists in these segments. So in 6 months, you actually can get across all the certificates as it appears. One different approach, and many participants from previous class will tell you that normally when you do a case studies or capstone, it's like, oh, okay, I've just done it, right? But this one is tough, right? We work very, very deeply with you to ensure that you build the best of the capstone projects. And if you want to realize, for example, the current batch recently did a video on Egyptian ecosystem and Philippine ecosystem on fintech side. So Maitri, if you can share the link to the people if they want to see it, that'd be good. You can look at what our participants have done. This is the current batch which is running, but they've gone in, and there are two projects typically will do in the baseline. So the second project they are going to do on capstone is to build their own startup, and that takes a lot of effort. They have to do research, and many of them the frameworks are similar to building their own companies. And as many of them have built their own companies in last 1.5 to 2 years, they've all come back and told us that this framework is what they went on using it. And actually the real life was slightly easier than the kind of learning they have got through. Again, I pause right now and take few questions. I know I am almost close to the time, but I have time for maybe 5 minutes for Q&A, please. Let me see if I see some questions here. Just 1 second. Please do share your feedback. And as I said, all those who share their feedback back to us, we will share the response in deck as well. There's a question from Aju. Do you believe that with AA and Open ecosystem coming up with full power and UPI being the main railroad of payments, will the small street vendors will get a small ticket loan at affordable rates? Yes, I do think so. That's what should happen. And UPI is taking care of digitization. For example, every panwala and every dukanwala, kelawala is willing to take a digital payment, which is brilliant. So I think, and with Open coming on not just Open, with the ONDC coming in, these small guys will also get digital transaction. For example, today when we buy product nearby, for example, we buy from Amazon or Myntra and other places, but when we get home delivery done, we actually, other than for food, rest all is done on direct connect. So you call the local grocery, you call the local medicine guy, and he delivers at home. That transaction is not visible. ONDC will ensure that that transaction is also tracked end to end. So you exactly know what he has sold. So your Bahi Khata will be available, and that will be powerful. So I do believe that before I die, the rates of interest to the MSMEs should be on par with retail customers, salaried class. It's horribly wrong right now, where the employers, which are MSMEs, get a worse rate than the employees. Right? It's very awkward. So I think that should happen, hopefully. Just 1 second. So I think Anuradh was also asking question that current account or not. I said I'll come back. Will trade finance and others will also be part? Not really as of now. It might just come at one point in time, but this is more on the deposit side of it. trade finance will come up with its own framework, maybe okay, not beyond, because that's largely coming from corporate perspective. So that has to be aggregated. Maybe that is easier to do because that's going to work in a not very heavy transaction way. So it is possible that may come on a blockchain framework, and that can be built by the country. So let's see how it goes. I'm not the best judge of it right now. Yeah, so the another question is that Manish is asking, do you think AA framework will ensure that there is a reduction in high delinquency and fraud rates with lenders and fintechs? Yes, logically so, right? I think there's still a lot of fraud which happens where people print a statement and make some changes, and I keep meeting so many people saying that how do you reduce fraud rates in a scanned document and all that. I think that should come down because it's straight from the lender or straight from the bank. So there's no way somebody can actually fudge. So which is beautiful. Harish is asking, we are currently catering to digital lending and LS loans against share, I think back of a solution to 3-4 clients. How will this impact? So I think if you're doing digital lending, you need to use the data for underwriting perspective and risk management perspective, and potentially creating a customized product, and sort of if you have fair idea about the customer cash flows, you can actually create a very custom built product which is not built today. Nobody does a custom built product. It is a standard product and sold to you. If I have access to your data over a period of time, can I create I know that you have a higher expense when the kids payment has to be done. Instead of creating a separate education loan, can you build a cash flow based loan saying that, okay, you need this money only for say 6 weeks, 12 weeks, I'll give you some loan for that. So I think we need to have custom product coming in, which was never the case. It was a stock product sold by the sales guys directly to the customer or at the touch point, right? When you go to a education issue, they will say that, okay, you can take this loan. So that's how it was. Things will change. So yeah, any other questions, guys, before we close? You can actually ask the question as well, right? You can actually video call. You can also speak if that be so. So I think Sanjeev, you are asking that how can it be introduced to your country? Sanjeev, let's talk about it. Very happy to sort of share my inputs, and if there's anything which we can help in linking you to the right people in the country, we will do that. I think Satish is asking primarily on any global example, typically of account aggregator. I think the framework is afresh. Many of them in the other countries would have done it, but we have a centralized entity to do it. So there is no coordination issue. Ideally, OK should have had a central entity. So it will simplify the regulation process. So I don't think there are too many entities like that. But the way UPI came first, this will also come first, and many other countries should ideally pick it up and work on it. So with this, I pause. I'll pause for the next 30 seconds. If there is no question, I'll close now. And if you have any more recommendation, you can ask me. We'll try to see if we can next webinar on another subject. If you are looking for a role in the ecosystem, you can apply. You can share your details, and because many of our clients are also intensively hiring. And on a side note, if you are looking for meeting the leaders and hearing the right guys, in February of next year, we are running Bharat Fintech Summit, focused primarily on inclusion, innovation, and collaboration. One of the largest, I guess, we will do. So you can join that as well. So with this, I pause. Yeah, somebody was asking the question. Go ahead, please. If no, we close now. Thank you, guys. Thank you. Thank you.